Hey guys, how's it going? Welcome back to Get Rich with Kareem. Today I'll be discussing an important topic. What's the difference between value investing and growth investing? But before we start, don't forget to make sure you subscribe to the channel, turn the notification bells on, and give me a like if you like the content, give me a dislike if you don't, and leave me comments below on what you want to see next in upcoming videos. But today we're coming to discuss the value investing versus growth investing. So, what is the difference? Let's start with value investing, which is the famous approach with which a lot of people talk about, like to take, which is the value investing. It's the same approach that Warren Buffett takes, and it was approach actually created by Benjamin Graham. You know, the guy Warren Buffett really likes, the famous investor. He's not a guy; he's a famous investor. Anyway, so what is value investing? Value investing goes around the approach of valuing a stock and buying a stock according to its value. So what they will do, in value investing, you take the financials, you take the assets and the liabilities, you'll take the earnings, you'll take past financial reports for like 10 years or something. That's what, if you really want to get into the company, okay. You'll take the financials, you'll take the earnings, you will take the revenue, income stream, profits, and you will, according to some formulas and matrix, you will calculate the value of the company. And then you will look at cheap companies, okay, undervalued companies, according to the stock price, and you will buy this company in hope of the market or the wall of Wall Street realizing the the potential in the stock and the undervalued ness in the stock. Okay. So this is what value investors do. They try to buy cheap things on sale. You know how when you go to the supermarket you find things on sale, and you find something that is really cheap and you buy it in terms of in hopes of maybe flipping it. Okay, well, that's the same exact idea, but in terms of companies. You're buying parts of companies, you know that these companies are now undervalued, are on sale, in hope of this price actually rebounding. It probably does, and you selling in a profit. But it's not easy. It's a little bit hard, okay, because it requires a lot of effort, a lot of dedication to actually read the financial reports, read the earnings calls, and look at the the profits and the revenue, calculating them. It's not easy. It requires a lot of effort, and they're not easy to find usually, especially in big bull markets or extended bull markets. Very hard to find value stocks, and this is the reason why Warren Buffett actually for 3 to 4 years now has not been buying anything major, and he's just been piling up in cash. It's because he's not finding any opportunities, and this is the problem of value investors or value investing. And this is why some people say Warren Buffett is a little bit outdated. Well, this is the problem exactly. It's hard to find deals. It's hard to find undervalued stocks in these environments. But if you can, it's the safest way to make money in the stock market, because basically you're buying a stock for cheap price. Okay. The price is gonna rebound. It's a company, as long as the company's not gonna go bankrupt or something, the price is gonna rebound. Okay, so this is what value investing is. Now, for growth investing doesn't use this approach at all. In growth investing, you look for companies. You don't care about financials much. Okay, as in value investing, you do care a lot about financials. But in value investing, in growth investing, you really don't care about financials. All you care about is the future of the company. So you look at the company, you see, okay, is this company gonna be in the future? Is it the future in the world? Okay, and if it does, you do buy. It has a very high risk to reward ratio, very high, because the company might go bankrupt, the company might not succeed, okay, and you might lose all your money. But if a company succeeds, you'll make much more than value investing does make, okay, because you're basically betting on a company, right, to succeed or not to succeed. This is not to say that growth investing doesn't use fundamentals at all. It does. It's not trading, okay, but it doesn't emphasize much fundamentals and financial reports as much as the outlook of the company. okay, and the earnings. Of course, earnings play major role in deciding what growth investing companies to buy, because high earnings means high growth. Okay, so now what method should you take? Okay, maybe you don't know. Yeah, so what method should you actually choose in investing? Well, this really depends for you, but in general, um, the more effort you're willing to put, okay, not really the more effort. It's more about the risk to reward ratio, really. Um, if you're willing to, you know, take a lot of risk in terms of gaining big rewards, okay, although you might lose a lot, then you should go definitely with the growth investing. But if you're in terms of value and you really don't want to lose much, you're really into gaining, of course, all of a sudden into gaining, but you don't have any, your risk to reward ratio is low, of course. Then of course, value investing, go ahead and go with value investing. But I'm telling you, value investing is a little bit harder, a little bit effort, and yeah, I mean, you're putting a lot of effort to decrease the risk, okay, and the reward actually. So yeah, that's the difference. If you want to, my approach, of course I actually encourage growth investing and not value investing bullshit. Anyway, but I respect, of course, all those who use value investing. This is just my opinion, and always remember, consult your financial advisor. I'm not a financial advisor. I'm just a guy on YouTube, giving my opinions. So consult financial advisor. This is just for fun, and yeah, thanks for watching. Don't forget to subscribe, like the video. Give me opinions on what should I do next. And yeah, thanks for watching.